Hey Carl, good afternoon. Happy Thursday evening here. We're going to take some time this evening. We're going to take a little bit of time this evening to digest some data. We're certainly going to look at San Antonio versus the entire MLS. And then we're going to break down some additional areas. Now, this evening's talk, we're not only going to talk about the numbers, but we're going to actually speak to what the information is telling us. We're going to share that with our audience. All right, so welcome. Hey, Carl, tell us a little bit about you, man.
I'm first of all, thanks for allowing me to be part of your show. So I'm a realtor, licensed realtor in San Antonio, Texas. I'm also licensed in Austin, Texas. I own a team, I guess, a company with my brother, Silva Property Group. We manage properties and do real estate. I am technically the marketing director of Silva Property Group, but I prefer just to be a marketing person. I have two dogs. I like to travel, and I actually really interested in data, and I love deciphering this stuff. So I hope I can bring value to this show.
Hey, Carl, appreciate you, man. And listen, I so appreciate you talking about the team because I've got the wonderful opportunity to be a team member on Silva Property Group's team. And man, it's just every day, the energy, the camaraderie, everything that we bring to the team. Just love it. So appreciate you guys for having me as a team member. I love it, love it, love it. All right, hey, we're gonna just dive into some data. So what I've got pulled up on our screen here is our data aggregator, InfoSparks. And I'm gonna just explain everything we're looking at. So right now we're looking at data over a year. And what we're doing is rolling 3 months worth of the information. And the reason we're doing the rolling 3 months is information is changing so fast these days that we're shortening the window so we can see the fluctuations in what's happening in the marketplace. All right. Keep in mind, San Antonio Board of Realtors have a wide area between here and Bernie, Seguin, some areas in New Braunfels. But so what we're looking at, the blue line is telling us is what the entire MLS numbers are. And then the green line below is showing us San Antonio's number as a whole. All right. So that's what we're gonna digest today. And one of our first data points that we're gonna look at is the average sale price, right? If you look at just the trend line of the average sale price, we've seen that, if we go back all the way to August of 2021, we see that trend line kind of climbing.
Yep.
All right. And then if we come over here, because so many people are asking what's happening nowadays, right? Here we are in June, and look at what the trend line does, right? So we were climbing from, say, go back here to December, where we were on average, our homes were 317,959 in San Antonio and 354 for the entire MLS. We grew to where we're seeing 351 and then 389, where we start seeing this type of flat line going on. So what do you think is happening here?
Well, so I have some immediate thoughts. Like, it was 3 months ago, like in June, maybe even in May, when the media started saying that the market was crashing. But for a whole month it was still rising.
Yes.
And even still, I think this is the bigger picture point. Even still, since June, for the past 3 months, definitely, if not since May, people have been saying the market is crashing. The housing market is a bubble and it's going to pop. But this is the past 3 months since June. Look at that line. That doesn't look like a crash to me.
More of a taper, right? So it looks like a taper.
I mean, at the very least, it's it's a rebalancing of the market, but it you have sharper losses in some of these 3 month periods here than you've had in this 3 months where the bubble's popping or the market's going to crash.
Absolutely.
I
Absolutely.
don't think people need to be concerned about that. You know, no one knows what the future holds, but
Yeah.
if you believe people in June that the market was crashing, well, we're now in coming on late September and it has not crashed. And the data shows us right there with just the very first data point we looked at.
Yeah, no, we're still a conservative market in my eyes because we have great, this is Military City, USA. You've got an entire military population around 5 bases, right? Five geographic locations, right, where the military is in San Antonio, right?
Right.
So just that alone is big for our economy. So we're going to see those jobs. Obviously, those don't fluctuate with the economy so much. But then we have a good, strong corporate structure here. You know, a lot of businesses here locally. I mean, in San Antonio, you really don't have, the high um, rates of fluctuation when it comes to people holding a job. You typically find people holding a job steady for a long period of time. And I think even though in America, in the greater U.S., you hear the talks, the rattles of, hey, we're going to hit a recession. I think we're going to see still a strong market in San Antonio.
Absolutely. And to your point about the military moving in and moving out, there's always action in the real estate market here. So
Yes.
it's a little bit more difficult for us as a market to have these huge spikes or huge crashes because things are constantly happening here, buying and selling. But here's another point. Not everyone who moves out of San Antonio is selling their house.
Ooh.
And that goes for our military personnel as well who are PCSing or relocating. They're not all selling their homes, and in a lot of cases they're retaining their homes as an asset. They're renting it out for the time being. Maybe they plan on coming back, or they just build a rental portfolio every city they go. But an equal amount of people are coming into the city, but not an equal amount of homes are being sold. And so there is always going to be some sort of inventory shortage unless builders pick up the pace in what they're doing from the new construction side. What do we have here?
Absolutely. Absolutely. What I wanted to do, I wanted to just take some time to go back 5 years. Okay.
Okay.
This is data point from January 2017, right? And just look at on a rolling 3 months how our market has been, right?
Mm-hmm.
Always cooling down in October, right? Going into November, December. But coming out of that, you always see that increase, right? But the market has always done some type of, adjustment up and down based on the seasons, right?
Right.
I mean, that's April. You're going into, that's when you're going into that summertime, right? People are buying, selling heavily, right?
Yeah,
But
but this is how this is different than main media, is that these aren't assumptions or guesses. Like, this is the data. The data clearly shows just over that 3 year period between 17 and 19, it's a snake. It's a snake
yes,
gradually moving up a hill.
yes. I mean, that's a great observation. Obviously, we had the COVID-19 scenario, right? So that's what happened. So if this was a snake gradually going up a hill, right, it would tend to reason that we would just have continued kind of somewhere down here where my cursor is. But because you've got the COVID-19 scenario where you just didn't have the construction happening on a continuous basis because of lockdown, supply chain. I mean, the supply chain literally was broken. It wasn't just compressed, it was broken. They had to repair the supply chain. And once they repaired the supply chain in that year, then, and then people started coming out, people who had been, used to spending was saving, right? So many people came out. The people who would have bought homes started buying homes, and the people who didn't think about buying homes said, "Hey, I got some cash hanging around. why not buy a house? And then people say, well, I've got to work at home, so now I want to trade up. You know what I mean? And I might not sell. I might just rent the one I have and trade up anyways.
Right.
Right.
But how
So
much money do you think these people had saved up that they just decided to buy a house? I mean, I can imagine so many families having the equivalent in their bank account and savings as like, okay, I'm gonna take my partner, and my 3 children to Disney World. What's that gonna cost? Like $15,000-$20,000?
well,
So then someone now is in a COVID time period and they've got $20,000 sitting in a trip account, and it's, what's it cost to buy a house? It really doesn't cost that much.
it doesn't. And then I talked to you about the strong military population here and the strong middle class sector here, working class, but really mid to upper middle class in San Antonio area. What you see is folks who can afford it, who didn't have the opportunity to spend money going out. Everybody was eating at home. Just that's a big saving,
Right.
not going to restaurants and everything else, right? So
Mhm.
all the savings occurred. Then remember, the government gave us 3 stimulus packages. I mean, I think some people may have even gotten more. I don't know. But man, it was wild. You know what I mean? But that's money on top of your savings that you just got to stack and put away,
Right.
right? Because you're not doing all of the things that you typically do in life, right? For a year and a half, almost 2 years. So now you built a saving portfolio. Now you're saying, hey, I'm ready to get out and buy a house. So even if you were never thinking about buying a house, now you have some down payment money, right? So now you're going out to buy a house, right?
Exactly. Yeah, I think the barrier of entry was just super low. I mean, given what we've just talked about, and also the interest rates being at 2.46 or however low it was,
Yes.
the barrier of entry to buy a home was just so low. I mean, the lowest it's been since 2008. And
Mm-hmm.
I think that the similarities between that are what is causing people to start talking about a bubble and a crash and not letting something happen again. But I mean, we can't downplay that the market is slowing down. Well, physically in our market, we can see it. The
Mm-hmm.
data is showing that, there's a slight decline. So we can't downplay that this is not dropping, because if it drops down to where it should be, we're losing $100,000 on average in equity, because it should be about $100,000 less.
Yes.
So when you think
So
about, is it a good market or a bad market? Well, it depends what you're trying to do. Because if you're a seller, it's a great market for you still. Because
mm-hmm.
even though you're not going to get maybe $10,000 or $20,000 over asking price and everything you want, you're still selling your home for $100,000 more than you paid for it.
That's in today's market.
Today's
Now,
market, right?
yeah,
Yeah.
yeah. So if a seller is thinking, if I was in the market to sell, I'd be locking in that realtor and saying, hey, get this on the market and let's get this thing moved,
Yeah, I mean, and it depends on how you look at the data here at the end of the table. If you think that downward slope is going to continue, the
Mm-hmm.
value of your home is going to continue dropping under that presumption. If you think it's just going to bounce back, then you might wait out for a little bit more money or equity in your home, but you just never know. And so if you plan on refinancing or selling your home at $100,000 profit, I would do it sooner rather than later.
And let's not talk about the Fed's interest rate hike just today. I mean, it's
Right.
bananas. You never know. They're just sitting around and thinking, man, what do we need to do to cool this inflationary pressure? For a long time, they kept saying we want to see inflation, right? So things, but now the inflation is just running away from them. They're
Right.
trying, so we're gonna open up. So we talked a lot about the sales price, but let's jump over and talk about some days on the market, because if somebody is in the market and thinking about selling their home, let's look at what days in the market have done over the past 5 years, and then we're gonna get it closer to about this year, right?
Sheldon, I think before we get into this, I want to ask you a question.
Yeah.
what is important about days on market? What does that really tell us as we look at the data?
So days on market is the amount of time it takes a home to sell. How long does it sit on the market, right? Before it's actually sold. Um, what that tells us right now is it's a kind of function of how many buyers are in the market and how many homes are there for that buyer, that qualified buyer looking to purchase a home, right? And if the days on market are increasing, we're gonna or decreasing, right? We're seeing that more buyers are demanding the homes that's on the market. But if it's increasing, then there's more homes and buyers have more of a choice. So they're taking their time and being a little bit more picky with what they're looking for.
Awesome. So the 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 downward slopes would be then, buyers just having a rush to buy. That's fewer days on market. Buyers are in a rush to buy. And then the peaks would then be buyers feeling like they have some choices, so they're not gonna jump on the very first thing they see.
That, but also it's cyclical because once you get into the buying months or into the spring months where people are looking to buy going into summer, typically you go into summer kind of when the people are making those transactions, coming in, trying to get a home, get situated, get the kids in school, things of that nature. So if you look at the graphs, really, if you get to March, you start seeing the days on market drop, right? Going into June, but as you come out of June, what starts happening to the days on market, right? It starts increasing because people have found the homes they want, right? Things are sitting longer. So that's the cyclical nature of things, right? This here was a function of the inventory we talked about, not enough inventory. I mean, you remember people said, I could put a home on the market today and it's sold tomorrow. You
Yep.
know what I mean? It
Yep.
was just that fast. People were going in, looking at the walls, and going out and saying, "Write the offer
Yeah.
right now and
Yeah.
give all the concessions. We're not going to do any. We don't want him to do anything. Just pack up and leave, and we'll take
Yeah.
it. We'll take
And
whatever.
in several personal cases, I had buyers that I already knew would purchase the property that I got a listing agreement for.
Mm-hmm.
It didn't even go anywhere. It just, you know,
Yeah, you don't even put that on the market. You try to come to an agreement unless the seller just really wanted to get the competition stirred.
yeah.
But
And I
in
mean,
that case,
not to go off on a different topic, but that's a really good point. You have to definitely make sure that you are careful, not to be just looking out for your best interests. You have to let them know that, if we put this on the open market, people are going to be competing against each other. You could get higher bids at more favorable terms, and so it's just up to them to make that educated decision, and not up to us.
absolutely, we're always going to be thinking about our clients ahead of ourselves in every case. Um, so again, this is a function of COVID coming into 21, right? But look at what is happening. Days on market are increasing as we're speaking right now. I mean, it's just that.
Right.
It's a function of supply going up, more homes on the market, things are sitting longer. We're in that period of time anyways, where things typically sit longer. If you look at it, it's the same time frame here. It's the same time frame here. It's the same time frame here. So we
Yeah.
look at historical versus today. It's just the nature
It's
of things,
just
right?
normal, right?
Normal, yes.
Yeah. Well,
And
except that I would argue against our points that it being this far low is not normal.
yes, that is
It
not
it
normal.
it should
Yes.
it should be more somewhere around 36, 37 days if it
Just
were maintaining a normal trajectory.
right here, just like you're totally right. Between 36 and 37 days, right here, September. And so if we look at September 2019, September 28, 18, September 2017, all within that 35-day range on the market. So this is what we do for our clients is educate them so they have the appropriate expectations because the last 2 years have been so different. We want to make sure we're resetting those expectations as we have conversations with our clients. All right, so what else do you want to look at this time?
So I think price per square foot is also an interesting data point, in my opinion.
Absolutely.
And not just for residential home buyers, but especially for investors who
Yes.
are really trying to pinch every dollar. So, honestly, going into this, I don't know what this data is going to show me, but price per square foot is something I use very, very frequently in my filtered searches for my investment clients. And it actually it's almost the foundation of all of the other filters that I have. So I'm just
Yeah.
interested to see if this data table will show us anything.
Price per square foot, as you're looking at the table, and we're going all the way back to 2017 again, you see that steady kind of climb, right?
Yeah,
Just the steady climb. And here we go, February 2020 and beyond, right? You have that hockey stick. All right, keep in mind we're looking at a rolling 3 months,
yeah,
right? But just in February 2020, or you were looking at $117 a square foot, right? In San Antonio,
crazy.
121. And then look at where it's at now. We're 172. Look at, I mean, this is
That's crazy.
so. I mean, if you're thinking about doing some remodel, or if you anything you're thinking about doing right now, I mean, if you're thinking about buying right now, this is what you're expecting to pay, right?
And
Now we,
from the sales side, I mean, again, to anyone who's on the fence about selling right now, it might take a little longer than it was taking 3 or 4 or 5, 6 months ago. But I mean, this is almost a mirrored version of our average home price or average sales price, because this really should be about $100 cheaper per square foot. It should be about not $100 per square foot. I'm sorry. It should be about maybe $30 or $40 less a square foot. About
yes,
150 a square foot is where we should be if it followed the same trajectory. And so if you have a home, you're making $40 more a square foot right now, regardless of what you think the market's going to do, whether you think it's going down or whether it's crashing and it's going to come up again and you can sell for more. I mean, if this was an average market and COVID hadn't have happened, you'd be making $40 less a square foot than you would be making now. So
yeah.
if that
And
carries any weight.
now here's an interesting conversation to have. So you see this little turn here, correct?
Mm-hmm.
Did everybody who buy in this time frame, did they overpay?
Well, the real answer, the actual answer is no. Because you don't contract to purchase a home and sign that contract without being okay with it. And you made the offer you made, you agreed to the price you agreed to. If you feel like you overpaid, it's because either you weren't advised properly or you were just too earnest to get a home. And so a home's value is market value. It's not what the appraiser says. And that's why a lot of times we pay more than the appraised value, because it's all based on market value. It doesn't matter if a home's worth 150,000. If someone's willing to pay 300 for it, it's a $300,000 home. And so if you are willing to pay whatever you paid for your home, you can't say you overpaid, because you are the one who caused that market value of whatever it is you purchased it for.
Absolutely. So the adage that people say, well, it's a seller's market. I've often tried to say to myself, if you have a realtor that is gonna go to bat for you and ensure that they not just get the right price but the right terms, right, for you, then you can always come out feeling like you've gotten the best deal in the situation that you were in.
Yeah,
You
and
know?
at the very least, both parties leave feeling like they got something out of it, and they're not hurtful about it.
Yeah, and that's why, as realtors, we have to just be direct and straightforward with our client. If you purchase at this price, it is my opinion, and you give them your opinion. Now you make the final decision. But I've had a client that was so anxious that, oh no, I get it right now. Here's my advice to you, and so much so that I actually typed it just in case, because they were just paying so much of an inflated
Yeah,
price.
yeah.
And but it was the anxiety that had built up and everything they had heard on in the news. And you show them the data, emotion, man. I'm telling you, this emotional world can sometimes, it can sometimes take control.
Yeah, it can, man. It's a big part of our job to take the emotion out of the contracts, but it's super difficult sometimes. We've got about 10 minutes. Is this everything that this graph shows us? And can we jump to something to finish this off?
Yeah, well, obviously we always we talked about days on market. Um, do you think we can look at shows per listing?
Sure.
Because listings are sitting on the market,
Hmm.
right? So if somebody has their home listed right now, how many showings are they getting? Right? So, for every listing, you could go back to the data starting in 2018. I'm keeping that 5-year look. You see you're getting in January four to five shows per listing, right? As you go into May, it increases, right? Then it comes all the way back down as you get to December. So it's the same cyclical nature that you find, when it comes to days on market. The same cyclical nature. Again, you're getting more people seeing your homes do it at
It's
different
happening at the same
times.
time. It's definitely a reflection of the other graph, showing that in the winter the showings are going. Hold on, the showings are going up in the winter here in December. Oh, but they're going up as spring comes.
Yeah, well,
And
this is
that was 2021. Okay.
yeah. Let's go back to a time that made a little bit more sense. Let's go back to 2018, right?
Right.
So you're at January 2018. You're at 5 showings in February
So
per
showings
listing.
increase as spring comes.
As spring comes,
Yep.
decreases as you go into winter. Same thing here, right? So the same thing had happened over the previous years before COVID. And then, this is what we have to always explain to clients is what we saw in COVID was just different. Now, it's still the same pattern, right? It's just more people looking for homes. So you
Right.
see the same kind of pattern here. It's the same pattern here. Just this is just smaller, right? There's just more buyers on the market. I think at this point. And
Well,
that's what you see more.
I would also just put this in there as a point. With technology in the past few years, it has made it a lot easier for agents to schedule showings through apps and through the MLS,
Yes,
namely San Antonio Board of Realtors MLS, providing us with showing time, which almost every agent uses. And if back in 18, 19, and just before COVID hit in 20, agents weren't really using software like that, that would justify why showings were down. Maybe showings weren't down per se, but maybe it just wasn't recorded because they weren't using the technology to record it.
absolutely. Yeah. So this is all, we're getting real-time data from Showing Time, which is the primary showing app that we use. Again, back in 18, you may have more agents now that's using that technology and leveraging that technology. So we're seeing more of a data spread.
Yeah. All right. So how about an end cap?
Well, hey, so listen, this is what we're gonna do on Thursdays, about 6 or 7. We're gonna lock in a solid time. But the key that we're gonna do is we're gonna just look at the data. We're gonna look at all the data. We're gonna aggregate it. We're gonna spend some time digesting the data, and then not just showing you the numbers, but interpreting what the numbers mean. So that's what we're going to do for the folks that take the time out of their day to watch this. We're going to interpret the data that we're seeing, and then hopefully, if you have any data you want to see, if you want us to dive in a little closer on a certain city, please put that, please send us a note. And you send us a note, we're gonna, again, pull those cities up that you want to see and bounce them against the overall data. Carl?
Yep. Thanks for having me on. I can't wait for next week. I really enjoyed our first show. It was interesting seeing the data this week because I feel like last week we really didn't know what was going to happen. And I mean, here we are. It's Thursday. We're going to try to get this thing posted, and you will have this data to enter into the weekend and whatever showings you have scheduled with your agent. And if you need help seeing any homes, make sure that you reach out to us, Sheldon Brown, right there, and he'll be happy to help you out with any listings that you want to go see, any homes you want to go see, any open houses you need someone to accompany you to so you don't get talked into something by somebody else. I hope you got some value out of the show today. We'll keep trying to improve it. Like Sheldon said, let us know in the comments anything you'd like to see or you'd like to see us focus more on. And this is going to be fun and interesting. Thanks, Sheldon.
Hey, have a good one. Thank you. Thanks for hanging out with me today.
All right, we'll see you next week.
See you next week.